All right, everything looking good. We are live. Should be coming through loud and clear. Let me know when you guys can hear me. In the meantime, let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:02 p.m. Eastern Standard Time on 12/7/2022. And as always, before we get started, I'd like to remind you, this is obviously not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right. So we've got about a week left until the Fed meeting. Obviously expecting at least 50 basis point hike. Could see 75, could see 25. Anything's possible at this point in time, though. I would count on 50, as I feel like that is what the market is pricing in. So let's go ahead and jump in over here. We'll take a look at what's going on with TNX, and hopefully that can give us an idea what to expect. All right. So TNX selling off, breaking down to a new cycle low once again here. So very interesting move. We see obviously the DXY was ahead by a few days, broke down pretty convincingly, and has been hanging out around this level, around the 200s. We're seeing now TNX starting to break down to that level as well. Obviously, we always like to see confluence, so the more things taking place at the same time, the better. If we go out to a longer time frame and just take a look at the weekly, turn off our drawing tools, we'll see what looks like essentially a thrust up here and then a retracement, another thrust up here. So what we're looking for is for this retracement to find support at the top of the previous thrust. So around 3.269, somewhere around there, is basically what we're looking for. Man, I'm not sure if this is coming through right now. YouTube appears to be acting a little bit goofy. Let me know in the chat if everything's coming through loud and clear. Yeah, I'm not really sure what's going on. So hopefully this is recording. It says good on the connection end, but I'm getting a lot of like weird stuff from YouTube. So that's the area we're looking to hold basically on the weekly. We want to see it close around that 3.25 level as support, and then the potential to continue to the upside. If it breaks down from there, we're looking at essentially the retest of those 200s. And that's not looking unlikely at this point in time. So now obviously, you know, we're looking at the technicals here, but we know fundamentally the Fed meeting is coming up and the Fed's getting ready to hike rates again. So this is going to really look like some serious inversion on the curve if the overnight rate is, you know, coming down this aggressively. And we'll actually jump over here and just take a look at that real quick. So here's our 210 monthly. So if we just take a look here, we'll see obviously the inversion took place right here briefly, consolidated for a bit, and then we inverted once again. And now what we see happening is, and you can see over here, the TNX is in orange, and the 2-year is in like this kind of turquoise bluish color. So the 2-year is substantially higher than the 10-year at this point in time. And it's not just about the actual inversion taking place, but it is the intensity of that inversion. And this is extremely, extremely intense. It's like something we've never seen before. You know, basically we have the 2-year up here at 4.33 repeating, and the 10-year is down here at 3.36. So essentially the market is pricing in that the Fed knows what they're doing. They're going to succeed in bringing down inflation, and they're going to be cutting, you know, rates before long. So we'll see if that's the case. But that's what the market's pricing in. Basically, the market is pricing in a soft landing. And I don't even think that's Powell's base case, which is fairly strange. So that being said, we have U.S. oil now. So we did break down to new lows today, as expected, as predicted. You guys know I have been talking about the low 70s to mid 60s for some time now. And here we are, just headed down to our target. Absolutely no surprise. Once we touch the 786, Came back down to it, visited it, broke through it. All that's left is the 886 and then the potential of a double bottom. Seems much more likely we're coming down here to the 60 to 62 level. And obviously that corresponds with our longer time frames. We're touching the 200 exponential already. 200 simple is slightly lower, about 65 bucks. So somewhere around that range, we're looking for that. Obviously, here's the thing. You can be bullish, you can be bearish, you can be right, you can be wrong. But it's very easy to be bullish at the wrong time or bearish at the wrong time. Just listen to who's been telling you this whole entire time that oil was bullish as it completely melted down. And just remember, everybody that's been bullish on oil this whole time since, literally hours from when we called the top in advance, we had predicted the top and then called it. We're literally breaking to new lows right now. So anybody that's been saying the oil trade was a good trade just got invalidated today because we just broke down to new lows. I'm not saying oil can't go back higher, but we're confirming into a bear market. We back tested twice on the moving averages, broke down to new lows. That's not good. So anybody with these crazy oil price targets, make sure they put a timestamp on that. Let you know when that target's going to get hit. Because you could say, sure, oil's going to 250. Maybe it happens in 10 years. Maybe it happens in 2. Maybe it happens in 50. Maybe it never happens. So VIX playing out real nicely. Obviously, we saw a pretty aggressive breakdown. Looked like it was going to take us out of this trade setup right here. But immediately afterwards, we gapped straight back up, and it's been running since. So we were looking at a 25% move to the upside with around a 3-to-1 risk-reward ratio to backtest the 200 exponential and simple. About halfway there already. Now we're printing a hard buy signal. Well, obviously, that was on top of, it looked pretty clear to us, obviously. In hindsight, I'm sure it looked clear to everybody, but we talked about it multiple times. This yellow line is key support because that was the previous low right here. What did we do? We basically sold off, printed a new low, and then had a massive reaction rally from there. So we technically already printed a new low. We could come out to the weekly chart and see how that reflects. New low on the weekly as well. What does that mean? Technically confirmed, a downtrend, lower highs and lower lows. What does that mean though? We basically reclaimed this blue support line with that gap up, held it and started moving aggressively to the upside. So not crazy to think that VIX is headed up to about 27 or something like that. Could even come all the way up to the top. As we see, this was once support, twice support, failed to be support, but kind of was on the horizontal here. But roughly with the gap up right there, not crazy to think we come all the way back up to the heart or potentially the top of the range. So we shall see. So Dow Jones obviously starting to roll over. This was key, taking out that previous high. Going to let a lot of people on the wrong side of the market if, when we come down here, this breaks. Now, obviously, there's still potential for it to hold. We are officially confirming into a bull market. The 200 exponential and 200 simple are both blue, and we're above them. It looks like temporary short-term exhaustion. We see obviously triple bearish divergence. We saw triple bullish divergence in the dollar. Obviously, this is exactly what we expected to happen. The real question is, when we come down to support at about 32.5, does that level hold? SPY, honestly, telling a much clearer story. Basically, a very clear rejection off the 200s and a lower high, and now it's rolling over, heading back down lower. Seems likely we're coming back down here to retest the lows and probably put in new lows. Triple Q's very weak, didn't even get up to the 200 moving averages. Again, rolling over, likely to revisit the lows. IWM, the old Russell. Same thing, lower high. We did put in this double bottom right here, but if we come back down to it again, it's going to start looking like a descending triangle. Lower highs, same lows. We just run sideways until eventually we fall down, statistically speaking. So XLE completely melting. So exactly what we said happened. It pulled a Bitcoin. That's literally what we said was going to happen. We come up here, we put in a high, we retrace pretty deep, come up, put in a lower high, come back down, start to form this little wedge, break out to the upside, take out the previous high, put in a new cycle high, get people extremely bullish at the top, fail to see any follow through whatsoever. And now we are just completely melting down. It's very clear now, once we come down to this level, we should see some temporary support. But the 200 seems much more likely. Now, when we get up there, we're going to be looking for a series of higher lows and higher highs, still in an uptrend. We got to be real careful with this one. We have used a lot of energy to get down here. Still have a blue slope line, which is uncommon after this much of a move. Wouldn't be crazy to think we're going to get some kind of bounce, some kind of retrace back up here to around 89 from around this 84 level where we're at right now. So that is it for this little run. Check out DXY next. Hey, if you're in the chat right now, can you let me know everything's coming through loud and clear? YouTube is still being like super weird right now. So DXY on the daily. So we see obviously DXY was in a rush to get down to 200 exponential and simple. Consolidating below them, not great right now. It's below all of its moving averages. We do see the hard buy signal coming out of the bearish control zone. We saw not 1, 2, 3 drives of bullish divergence. Typically, if we do get a pop, it's going to correspond with a breakout of a descending resistance and the moving averages. Not crazy to think we could get a move all the way back up to like the 109 level. So I am expecting relief or rally on this. Seems more likely it happens in the next week, or basically leading up to, or you know, with the actual hikes from Powell, which I wouldn't completely rule out 75 basis points. We've had pretty good data lately, and you know, good is bad, bad is good, opposite day. All right, so Tesla threatening the lows, likely to put in new lows very soon. Still expecting that continuation to our next support down here, our next Fibonacci. So target is the 382 still at about 136. So looking at magma flowing down the mountain, that liquid rock, another lower high, fails to get up to 200 exponential and simple, descending resistance. Obviously the target was slightly higher than we got. We're still holding for now above the 382. But if we do start to break down from this level, it's time to get out of that one, either with a trailing stop or just locking in your gains and just stepping aside. So Apple back at that support again as expected. I do expect this to break down eventually, hopefully sooner than later, and fully expect a retest of the 382 down here, new lows around like that 116 level, and the remainder of this trade setup to play out for that 31%. Google, so we back tested key support here, the 382 Fibonacci, rolling back over 821 potential bear cross. Looks like we're coming down here to sweep the lows. So, I mean, we had a nice rally. Everything tried. The ones that lagged behind ran out of time. You know, basically Meta came up here, filled the gap. Looks like it's ready to roll back over and go down. Nothing has changed with Meta. You know, if you're buying Meta, you're buying it because you thought it was undervalued. Well, when does it become fair valued again? Apparently right here at about that gap fill. And then Amazon is next. Amazon's chart looks absolutely atrocious at the lows. One of the few things, you know, oil and Amazon. I mean, if that's not a freaking canary in the coal mine for what's happening to the world economy or even just United States economy, I think that tells us something's going on here. So we're back at the levels from June of 2018 on Amazon. So very brutal. Very brutal. And I mean, it looks like it's about to keep going. So we front ran our last target, that double bottom at about 81. That seems likely, but you guys know, obviously we're looking for another leg down. And it could get nasty. So we'll see, but low 80s seems like probably a day or two away at this point in time. But again, maybe we see a little relief rally after this heavy selling. Hey, appreciate you. Thank you, Cazzolino. Hopefully I said that right. Yeah, YouTube's being like super weird. It's like forever showing like the loading screen and stuff like that on my end. So as long as it's coming through clear for you guys. All right, so Bitcoin on the daily. We did a full-on breakdown of the long-term Bitcoin chart today. So if you haven't checked out the static videos, check those out. I know what you're thinking too. Wait a minute, we're going to get daily static videos and still 3 live streams a week? For now, we'll see how it goes. But that being said, individual asset daily videos, as well as our typical live streams, which are going to be a little more on the shorter side. So Bitcoin daily rather, at the lows here, trying so hard to flip this 821 bull cross. We were so close to it and then failed, got pushed down. The 4 hour pointed exactly to it. I mean, the truth is though, we got the exact move that we were expecting or calling for. You know, on the 4 hour, exactly what we called for was this move up here to backtest the 200s. And it played out really nicely. Obviously, the 821 cross, nice move, backtest, hold support. Nice move up here, back test. And this is the area where Bitcoin has to hold. It's literally on the edge of the cliff. Because what we're looking at is potentially a one. I mean, we can use some of these tools that TradingView has put in place for us. Which one do I want? I think I want the fiver. The old fiver. So, I mean, depending what's going on here exactly, obviously we don't know, but it looked like this was going to be the 3, and then it was going to be shorter than the 1, so we're going to have a pathetic 5. So is that what played out? Maybe. It's possible, but I think more likely this is what we got going on. The 1, the 2, the 3, wherever the 4 takes us to, can't go deeper than around this area because that's the top of the 1. If we break down from here, we invalidate the potential for a 5th wave to the upside. And most likely, we just come straight down here, retest the previous low at 16,114. If that breaks, likely come down to 15,600. And then, obviously 14,000 is still the target. So this is our bull case scenario. We hold this level, we push up. So we'll see. If we do start pulling off a move like that, then we can start looking at some higher targets around like 18,600 or so. But right now, we don't want to get too greedy with it. Essentially, if we just look at the lengths of our various waves, this one is roughly $1,300. So we want to see our 3 be at least that long, which is $1,400. So now there's nothing telling us how long or how short the 5th wave needs to be, because the 3 is often the longest, never the shortest. It's already longer than the 1, so it doesn't have to be longer or shorter than the 5. We are building up a little bit of momentum here. We see the blue slope line flipping and a bunch of green histograms. So while we look kind of weak, not being able to secure this daily 821 cross, it's possible we get a push down, gets bought up aggressively, and then we actually do push up here. So next day or two is going to be crucial for crypto, because obviously if we break down more than just a little bit to that 16.6 level, if we start closing a daily below that, we invalidate the 5 waves and it goes down substantially. If we hold around this level and don't go below 16.6 in the next 24 to 48 hours, there's still a high probability we do get that 5th wave up and start retesting, the high 17s. So, I mean, it's not much, but we got to start somewhere. Obviously, looking at the 4-hour or daily, gonna give us a good idea. So Ethereum next. So Ethereum lost. It did have the 821 bolt cross. It lost it, closed back down below it. So we lost that kind of parabolic uptrend we had going on here. You could argue it's still kind of intact here. If we go by the closes there, we're basically threatening it. So if this doesn't rally back up and get back above 1,273, doesn't look good. Looks like it's definitely rolling over. Ethereum has been strong, been holding up nicely, but it does look like it's rolling over. Total market cap on the weekly still looks very, very bad. Below key support, acting as resistance below all the moving averages. Definitely not what you want to see. Bitcoin dominance with everything included on the weekly, still hanging out at the lows. If we take out those stable coins, though, we see Bitcoin is actually gaining dominance compared to the altcoins. So a lot of the scams are imploding. A lot of people are getting out of altcoins because they just don't trust them, or they've just lost, after you lose 90% of your money, you're just like, I'll just take these crumbs back, and buy lunch. So yeah, I mean, maybe Bitcoin's getting ready to take back a little market cap. We'll see. It's had a lot of time here to consolidate and hasn't been able to push up here, so wouldn't get too excited just yet. So Chili's, the old cheese dog, looks like it's coming down here to 236. I mean, this is a pretty low risk reward opportunity, or high reward risk opportunity, depending on how you want to look at it. And with the entry of the 236, we break down violently below that, 7% tight little stop loss. But I mean, if we start finding some support around this 236, around 13.32 cents, if we do get another pushback up here, we're talking about 124%, even halfway, even just a back test of the 382, and this thing starts presenting some freaking nice opportunity. Basically a 4-to-1 just from there, or the actual trade setup is it's like 17-to-1. So I wouldn't count on that, but there's definitely some potential. That one's been able to hold up a lot better than others. So it doesn't mean it's going to continue to do so, but it's worth an eye. If everything looks terrible and a couple things look good, probably a lot of people are going to watch the good things. and people are more likely to get into them, and then maybe a little momentum, and then next thing you know, locking in some gains while everything else is melting down. What's up, Cool Sheet? Good to see you. He says, good evening, bro. Thank you for all the knowledge. Oh, for sure, my dude. Thank you for being here. And also for your gratitude. Solana hanging out at the lows still. Looks really rough. This one's very, very tied into the whole Sam Bankman-Fried FTX situation. There's a strong argument to be made that, you know, this was never actually worth $240. I mean, that was made by me a long time ago when we were at $240 or $50. But now it's being made by everyone because we know they basically artificially inflated the price of this to make their balance sheet look a lot better. So does this ever get back to new all-time highs again? Probably not now. Probably not. So, you know, if 10 years from now, you ask me to look at Solana and we look at the chart and I'm like, oh man, look at this dead asset, dead cat bounce and never made it back to all-time highs and now it's just slowly melting down. You'll be like, yep, not surprised at all. So Chainlink had a little push up here, tried to cross the 821 back to the upside, did for a little bit, tried to get back on top of the 200, did for a little bit, and now again losing key support. Looks very, very likely to come back down here and retest the lows. 2 times we come down here already. It seems like we're coming back down one more time to that $5.30 range. Hard sell signal. Everything's rolling over. I mean, this could start getting brutal, guys. Could start getting real brutal. Crypto is not looking good right now. It's literally hanging on by a thread. That little like 2-finger cliffhanger grip. Oh, who liked that thumbnail from today, by the way? I know it's not the most legible, but I like used the actual poster. So I was like, all right, hopefully this will like register with some of the crowd. So Avalanche, again, looking really, really shaky here. 821 bull crossed, blue slope line into the bullish control zone. And it just looks like it's getting rejected. So we basically double bottom right here, push back up, come down to the 1.236, push back up, fail to get back above it. So now, you know, what is basically the previous low from back here is now acting as resistance. So if we drag this out just a little bit more, I mean, what really happened? I mean, we basically just, you know, this was our support down here, the previous low. We broke down, got rejected on the back test, got rejected on the back test. Seems like we're going to come back down here, retest the lows, and then probably go to the like 1.5 or, you know, 1.618. You know, we see obviously, you know, okay, we've talked about this a ton. We've talked about this a ton, and this is a beautiful chart to full on demonstrate my point. And if there's one thing you ever learn from anyone, including me, it should be basically, you know, the pillars of trading or investing, which is probability. What's your probability of something happening? And people don't think about this in the right way. Okay, if you flip a coin, the probability is heads or tails. If you get in your car, the probability of an accident is, you know, 1 in 10,000. So it's very important to understand that there's completely different probabilities associated with things. And part of your edge in the markets, which is what all this technical analysis is all about. The only reason we do any of this is to gain an edge. So all of a sudden that coin toss is not 50-50 anymore. Now maybe it's 51-49, or maybe it's 53-47. And then we become the casino, you know, the house of the casino essentially. We have a small edge over the market. So on a long enough time frame with proper risk reward, you know, or position size management and our edge, we make money. That's what it's all about. So the probability of success goes up when we trade with the trend. So how do we see that in full action? Downtrend right here, little mini uptrend right here, and then right back into a downtrend right here, okay? And what we see is we get down into the bearish control zone right here, and people try to buy the dip, and we get this pathetic move back to the upside. And then we come down to the bearish control zone again, and people try to buy the dip, and we continue to go lower. Then we finally get a little bounce to the upside. And in the bear market, we get the bullish control zone hard sell, which is basically, this was trading against the trend, trying to buy here, trying to buy here, trying to buy here. This is trading with the trend. So when we trade with the trend and we get the hard sell signal, it leads to massive amounts of downside. When we get the hard buy signal, it leads to this itty bitty little upside. Same thing again. We get this hard sell signal, massive amounts of downside. Here we are back in the bullish control zone. We had this hard buy. We move up a tiny bit. Now we're back in the bullish control zone, about to get rejected and get the hard sell signal again. This thing looks like it's going to new lows. It looks like, we already made it to the 1.236. Seems like the 1.382, more likely the 1.5 or the 1.618. It looks like Avalanche is about to get cut in half again. Potentially, maybe 30 to 40%. Be real careful on some of these cryptos that may or may not have been involved in or are themselves Ponzi schemes. And this comes from someone who literally has been doing technical analysis for years and has a channel on YouTube called Crypto Trend Trader. I don't hate crypto. I'm not being mean. I live in the real world and I'm talking about reality. So please understand the risk to the downside is immense on cryptos right now. So Polkadot is next, basically revisiting the lows, very, very close to being back at the lows again. Lowest close ever was at $5.13. And that was literally one candle from where we're at right now to get there. So very, very careful with these cryptos. Matic has been one of the stronger ones, hanging out at the 200 exponential. Between the 200 simple, if we break down below the 200 simple or the 382, we're not really interested in this anymore. Best case scenario is we come back down to the 200 simple. We get to enter from there because we never actually got above the 0.5 for our entry. If we can get an entry down here and then we can run a tight stop loss below the 382, if it breaks down, it's going to stop us out. We can reevaluate at the 236. But, without ever actually getting up here and closing above that 0.5, it makes sense for us to look to actually load up somewhere down here if we want to try to counter, it's still technically counter trend trading because we would be trying to enter off the 200 simple and the 200 exponential would still be red. So, we're at basically the neutral zone for this asset. It looks like it's going to roll over, but let's see what happens when we get down here because now that opens up quite a bit of opportunity for a potential long trade. XRP looking very, very weak. Still quite a bit off the lows, so it's a lot better than a lot of cryptos, but still below all the 200s. Fighting to try to reclaim it. Looks like it wants to come down here and revisit 34 cents. ADA, literally pennies off the lows. I would just expect this thing to just continue melting down with no end in sight. The 0.5 seems like the most likely target. So 24 cents for Cardano. Charles is probably dumping on your head right now. BNB, so this is it. I mean, this, honestly, for me, BNB and Bitcoin are like equal importance right now to the market. Because the truth is, I always look at Bitcoin as like sort of a gauge of the overall market, the sentiment, all that kind of stuff. The technicals, obviously. That being said, BNB right now is huge because we know there was a massive exchange failing. It was directly linked to, Binance and CZ. And I mean, we don't know if CZ actually started dumping, dumped all his FTX tokens. We don't know what part of that was, potentially collateral. We don't know what the deal is with Tether right now. There's a lot of unanswered questions right now and a lot of potential blowups. And the truth is, realistically, SPF and Alameda and FTX really blew up 6 months ago now? They really blew up during all of the last series of collapses. And all they did was just paper over it until, recently. So they were able to get away with it for a while. So now with this blow up, maybe there's a 6-month window for where other stuff that's already blown up, before it kind of comes to light. We see who's swimming naked, in the words of that super famous guy. What was his name? Buffet? Warren Buffet, a Frenchman, I believe. French investor. Oui, oui. So anyway, that was my impression. I hope you guys enjoyed it. I mean, if this thing loses a 200 exponential and simple, 236 we just tested right here. So, this is really the line in the sand. If we start losing 250, then what? It's 211. Then it's sub 200. And if we lose 200, I mean, this is really just the most massive, you know, Adam and Eve double tap of all time. And likely BNB is going down to like $40. PBR, oh, this was a request from last stream, gapped up here, hanging out at support. So it looks okay when it's holding out at support right now and could potentially continue the upside, but just confirmed into a bear market, broke down and put in a new low and basically like gapped its way back up. So the same way it gapped through this level on the way down and then back through it on the way up, it could very, very easily just drop down here to that $10.55 thing. And then let's see what happens from there. If it drops down here real quick, gets back above the 821, then you start looking at the 200s. There's a little bit of momentum in its favor, but as it's just melting down, doesn't look good to me, guys. And then old Berkshire. So we got the push up here, coming back down to retest support right here. You know, this is not what you want to see, obviously. A break above key resistance. We are retesting that support. If it holds, this thing could skyrocket and, you know, you just get an even better entry on this trade setup on essentially what is the W double bottom. And we found this in a couple places, including like Home Depot and some of the others. And it's played out nicely. Now, for the ones that have been slacking a little bit, this may be about to confirm into a bull trend. If this level holds, you know, this is likely headed back up here, at least to the 786, 337, if not to all-time highs. But this area really, really needs to hold. I mean, we have a first decent little thrust back to resistance. So if it holds here, it looks pretty bullish, honestly. If it doesn't hold this level, it's likely headed back down to our previous fibs, if not back to the lows. But I mean, we saw a lot of momentum build up, especially in those big name stocks, you know, the industrials, the healthcare, you know, all those Dow Jones names. So they may have just, you know, distorted the momentum indicator oscillators a little bit and made the market look stronger than it really is. Matter of fact, I say they may have. They really did. Cool Sheet says, how's Link USD look to you, medium to long term? I mean, we just looked at that, so you probably asked right before I looked at it. I mean, it doesn't look great. It looks better than some cryptos, but still pretty freaking bad. So gold, XAU. Okay, so this was important today. So we saw some more weakness in the dollar, and it broke back down from under the 200s. We saw strength in gold. We didn't see any of that strength translate to the actual stock market, though. Typically, we see weakness in the dollar. We see crypto and stocks and all that stuff explode. Crypto has been particularly weak lately. So obviously, gold took a leg back up as the dollar showed weakness, but the markets did not. They continued down lower from what looks like a temporary top. So gold actually looks okay. We do see, however, bearish divergence, a high here and a clear higher high here, a high here and a clear lower high here. So bearish divergence on both indicator oscillators. Maybe there's a third drive still in the cards. Maybe somebody's trying to exit their position from back up here, you know, a market maker, a whale, a central bank. I don't know. It looks okay right now. It's trying to at least fight back for the 200 exponential or simple. I do like that, but it is displaying some clear bearish divergence. And if we do see the dollar strengthen coming into the Fed meeting or after we get the hike, gold likely going to sell off. So silver hanging out here, still looking okay. Careful of potential bearish divergence printing right here. I mean, it looked pretty clear. Now it's hanging out back at this level. So maybe it does want one more drive of bearish divergence up to our 24.85 target. Silver juniors, back test the 382 and the 200s, hanging out there. If we can build up some strength in these metals, if they can continue up, we still have that target of 1364. So GSG breaking down violently. So we talked about this channel, how it's been hanging out in the channel. The longer it's in the channel for, the more likely it is to stay in the channel. We finally broke down, retesting the lows right here. You guys know, obviously, our macro target is this giant blue box. If you look at it on the weekly, it's not nearly as giant. Still the same blue, though. But it does seem now, I mean, we front ran that 236 a tiny bit. So that's where it could stop, just a tiny bit further, and then it's like off to the races. We're basically confirming into a bear market, breaking down from this level, potentially putting in new lows. Seems likely to me that we're actually getting ready to come back down to like 18 bucks. Which was some clear resistance, like historically speaking. So I'm looking at about 18. This is obviously like energy and commodities. So, take that however you want to take it. LNG broke down from our ascending wedge, back testing, trying to get back in there, 821. Still seems very, very likely. It's headed to 159. Mosaic holding on for now, barely though. Got to be careful of that bloody waterfall. This chart looks pretty similar to GSG and what's been happening here. So if we see something similar take place, that $42 target seems likely short term. Very close to confirming a bear market. And seems like we're headed to like 33 bucks. Oh, and uranium no longer exists. And it's gone. So CCJ, you guys can check out the long term on CCJ and uranium. We just did that video. You can check out, do the exact same thing on Tilray. We talked about how this was a crucial level. Keep in mind, it was made right here, that video was. And we talked about how important it was if we could stay above the 200 exponential or simple. Talked about this exact scenario where it could clearly get rejected and immediately sell off. And that was the top. Got to be very, very careful with this thing. Seems very likely. We basically have this ascending support. The trend picks up here. We take profits when we touch resistance right there. We end up getting another leg higher. Traps a lot of people. Not crazy to think after hitting the 200 exponential that maybe we push up higher to the 200 simple. Nope, the other way around. And that's exactly what happened. Now we're back down here at the consolidation area and back at that ascending green support. If we break down from this level, we lose all of the progress that we built and likely do head back down to retest the lows. So if you got a good entry on this, if you are up on your position, I'm not going to advise anybody, but, if it was me, I would make sure I have a stop loss in place or, have taken some profits off the table. The last thing you want to do is turn, what amounted to a double up into a loss. So UNH, okay, so these are those big Dow Jones names. So again, giving us a false sense of strength in the markets here, at resistance. This thing looks like it wants to go sky high. We do not see the same thing with Goldman Sachs. So we had that 1, the 2, the 3 push up here. Looked like we were going to go a little higher, but now we're already back testing that 1. Does not look like this structure is going to hold up if we're already, losing what amounted to a double top right here, breakdown, losing support. Measure move takes us back down here to this, what would have been a potential fib. I mean, we really got to look at it as what it is now. We broke down from the 236, so seems likely we're headed to the 382. Potentially deeper. I mean, let's say tomorrow price action comes all the way down to the 382 and then we manage to close back above 356. It still looks okay. If not, it's going to start looking pretty rough as we're violating key levels, just like what we talked about on Bitcoin in the short time frames. So HD, Home Depot, so we have that W. We're at resistance. We want to just consolidate here for a while. Above the 200s, we want to go sideways. We want to chew through this resistance, and then we want to get that measure move. If we don't, if we come down here, we start losing the 200s, we're no longer interested in this. We'll pay attention for it to potentially put in a higher low, but we'll assume it's going to come back down here. And then what is that really going to look like? I mean, it's not crazy to think that, what do I want? The channel. Not crazy to think that we're just doing something like this, and this thing is just, going through either accumulation or redistribution. Distribution, we break down, we chop around, more distribution taking place before our next markdown, potentially, or accumulation taking place. And then, once everybody's accumulated, we can shoot to the upside. We don't know if it's going to be distribution or accumulation. What we do know is right now we're trading in a clear range between resistance and support. So we have 3 touches on resistance, 2 touches on support. Seems very likely if we're just going to be in this range. $300 seems likely. After that, 266. It's going to be very difficult to get above 330. If we do, obviously off to the races. But in the meantime, range bound. So Caterpillar came up here, put in a slightly lower high right there. Looking pretty choppy right here. It looks like it wants to let go. We see quite a bit of a move on the knife here. A bunch of red histograms. Trending down fairly aggressively. I mean, by the time this thing gets to the 200s, it's going to be exhausted. So I think there's going to be a buying opportunity, at least for a short-term scalp, down about 10% from where we're at. Where does it go after that? New all-time highs or another lower high? We'll have to wait and see. MDO, McDonald's has been looking pretty rough. Obviously, the 821 bear crossed and, basically coming down here, retesting the lows. It's trying to hang on for now, but seems inevitable for like 250. Amgen got the breakout, the little gap up consolidation. Again, this is starting to look like a bullish reset. The histogram, all red coming down. Stochastics coming down pretty aggressively while we just go sideways. One of two things is going to happen. It's either going to break down here aggressively and catch up to the indicator oscillators, or these are going to cool off enough that it's just ready to rip. So could Amgen be the one and only thing to just rip and everything else melts down? Yeah, it's possible. So Microsoft got back above the 382, holding support for now. We have descending resistance. We have the 200s. We have the 382. So we have a lot of resistance above us and some support right below us. So it seems more likely than not we're going to trade around between 244 and 260. If we break down, we're headed back down to 215. If we break up, maybe 278 for the completion of the trade. I don't know. We'll see if it holds up. Again, we don't want to turn any of these winners into losers. We want to at least lock in some profits or at least get out, at the absolute minimum, break even after fees. Definitely not going to turn it into an L. So Visa looked like it was going to break above this descending resistance. Basically now looking like a throw over above the 200s for now, trying to flip them over. Again, getting above this 217 line, very, very crucial for us to look for a continuation trade to the upside. So far, just lower highs and lower lows, though. We threatened this right here, but basically could not get back above it. So, again, it looks like we're range bound between 200 and 218 until we break in one direction or the other. The longer we go sideways here, the better it is. A lot of these stocks would just look a lot better if they just go sideways. Honeywell is next. So blew through our little W, double bottom pattern right here. Shot up here. Hit some key resistance. Looks like it wants to come back down and check for support around 200 to 204. Still looks really strong though. Honestly, once these things flip into a bull market like this, we got to start looking at the 200s as a buying opportunity. So if this comes back down and finds support around like 195, 200, it's going to look like a buying opportunity. We'll have to see what the momentum indicator oscillators do, but got to trust it. When things say we're in a bear market, we trust it. So when they say we're flipping into a bull market, even if we don't believe it, we trust it. I mean, some of these stocks could literally be bottoming now. Other stocks might not bottom for 2 years. And, we could see like a true bifurcation in the market. Like we haven't seen before, especially with like profitable versus unprofitable companies. So TRV is next, Travelers Company. So we see some very, very clear bearish divergence here on both our indicator oscillators. Broke above the previous high, consolidating for now. Maybe we get one more drive up for a third drive bearish divergence, but when and if we do get the breakdown, seems likely to come to 172. Again, another W, double bottom. Not as clear here as we have a slightly lower low, but pretty clear like resistance neckline here. And essentially a measure move played out, retested the highs. So we'll have to see what happens now. This right now, the way I look at this is we're basically at resistance and support for like everything. So we don't know who's going to win. Obviously, the bears are negative. The bulls are positive. And everybody gets to vote. And they get to vote with their money. So soon we're going to find out who's going to win. And when we do, we're likely going to get a very violent move with quite a bit of continuation in that direction. Whether it's going to, new lows, as many assets, well, some assets are still right now, or back to all-time highs. Some things may never make it all-time highs, and some things may sell off violently and not make it back down to cycle lows. So Deere at resistance. That gap up seems like it wants to get closed. Still looking at that as a buying opportunity if we do start coming down to that level. I mean, we really got to see, though, part of all technical analysis, especially when everything is so correlated, is just knowing that the overall like breadth and look of the market is very important. So this is confirming into a bull market, at previous cycle highs. Of all the things to get bearish on, I don't think this is the best one, but it could very easily go to new highs and then sell off, just like we've seen with a couple stocks today. So Lulu, we've been talking about this one, obviously putting in higher lows, broke above the 200 exponential or simple, retesting the 618. We'll see what happens when it comes back down here. We want to see this level hold at like 350. And then we want to see that continuation of like 485. But I mean, Walmart is obviously doing well. And, these are sweatpants, or I think sweatsuits sold exclusively at Walmart. So that is Lululemon, I believe. Maybe Lululemon. I'm not sure the pronunciation. If it's at Target, it's Lululemon. If it's at Walmart, it's Lululemon. UUP, that dollar, that holla at the dollar. So we finally made it down to the 200 simple, which was our target. Came up here, closed that little gap, consolidating for now. So it seems likely the dollar's going to do a little dead cat bounce. That little dirty bounce. The 0.5 seems likely. I mean, there's a big gap right here. This one kind of got closed. This one didn't really. So we're going to come back up here to 29. Seems likely. Seems likely. I mean, all we need is a little relief rally in DXY, maybe in TNX, leading up to like the Fed meeting or at the Fed meeting or after the Fed meeting. And then, basically markets don't look so great for a week or two. By the end of the year, it's kind of like, meh, it wasn't terrible. And then we can go into 2023 with a clean slate and, potentially off to the races or complete meltdown. Who knows? But yeah, that's it. We made it to the end. Woo. I'm not sure what was up with those weird technical difficulties at the beginning of the stream. YouTube was trying to do me dirty. How we doing on time? 46 minutes. Hell yeah. So yeah, we'll go ahead and wrap it up there. Let me jump in chat real quick and then we'll get out of here. Everyone praying Litecoin is leading the way. Never heard of it. Is that some new crypto? Litecoin? Sounds like a scam. I'm just kidding. Yeah, I mean, everybody's always praying that something's leading the way. Litecoin has led the way in the past before, though. I think it's a total trash crypto, but it's kind of an OG. So, people are like, Bitcoin's gold, Litecoin's silver. I mean, if Bitcoin's gold and Litecoin's silver, we're in trouble. I'll probably just stick to the real stuff. I mean, if you start, obviously there's been all the debates and everything like that, but if you start looking at like viable time frames, like the last 1 year, 3 year, 5 years for like Bitcoin, Litecoin, gold, silver, I think without doctoring the data, just looking at random data points, I think you'd be surprised how well gold and silver have been doing. And it is strange also to see oil melting down while gold is showing some strength, because honestly, those two are typically like very, very correlated. So the fact that we're seeing oil energy melt down as gold moves up tells us that, we're potentially looking at that four horsemen scenario and, the market top before the big meltdown like 2000 or 2008 style. But that's it for today. Hopefully you guys enjoyed the stream. I hope you're enjoying those daily videos, little static videos. If you have any requests for those, please let me know in the comments. And we'll go ahead and wrap it up there. It is 8:50 p.m. Eastern Standard Time on Wednesday, 12/7/2022. This is our midweek market update. Obviously, have a week until the Fed meeting and our next rate hike. So I'll expect a little volatility until then, but that'll be the big market mover, the shaker. But obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. That's it for tonight. Crypto Trend Trader, and I'm out of here. Appreciate everybody tuning in. Everybody have a great night, and we'll see you on the static videos.